Folks, over the last few weeks, we've been seeing a lot of volatility in the markets, and that's been throwing a lot of prices off. Now, I'm going to tell you some things you may have heard, you may have not heard, but you might have heard the words being thrown around. It's selling at a premium, it's selling at a discount, it's above fair value. What does all of that mean? So let me explain to you what that means and how the dynamics of all of this premium to discount. Contrary to what most traders and investors believed, every ETF, exchange traded fund, actually has two values. That's right. It has the market value. That's what you would see right here. We're looking right now at the XLE. This is the energy sector S&P ETF. It's priced at $28.01 right now. But you notice here it says net asset value. It's $29.07. It's a little above this value by about $1.06. Well, that is the net asset value, which also calculates the weighted average percentage of the shares, the constituents, because most ETFs have constituents, which are shares. Here you have ConocoPhillips, you have Kinder or Exxon. These are all the stocks that make up. You could see here all these energy stocks that make up this XLE energy ETF. That's the S&P 500 major ETF. So when you take the asset value, the equity value of each share, and you add in the management fee, and you add in the legal fees, and you add in the dividend fee per share, you get the net asset value. It also includes, I might have also mentioned the management fee, which is very, very small, but it adds up. So usually 90% of the time, the net asset value will be higher because it has those fees above. So it would make no sense to buy the ETF, then go to the bank and say, I want you to give me the shares, then go get the shares, sell the shares at the exchange, and get the difference. That arbitrage typically doesn't work out because usually the net asset value, the second value, is higher, which means the asset is selling at a premium. Now, if the net asset value was lower, and I can't seem to find any right now assets that have a lower value, but during this little volatility period we've had in the S&P over the past few weeks because of coronavirus, we have seen a few, especially in the beginning of it, we've seen some ETFs, some gold ETFs, some energy ETFs, some bond ETFs actually have a net asset value, which you could see here. Again, it's 257, which is market value, the fair value or market value, which is at 250 here. But we saw some assets, some ETFs specifically, that had a net asset value below the market value, which means they were selling at a premium. So if you hear the term, this ETF is selling at a premium, that means the net asset value is below market value. And if you hear this ETF is selling at a, if you see an ETF selling at a discount, that means the net asset value is priced below market value. But if you hear it's selling at a premium, the ETF is selling at a premium, that means the net asset value is higher than the market value. But again, it doesn't happen very often. It happens, for example, you could see the ETF trading at a discount to fair value if one of the assets, for example, the constituents that makes up the ETF doesn't open or it closes down for some reason. Let's say Apple. And I don't know why this is a misprint. It's not three different alphabets or three different Amazons. It's just a misprint. But you have Apple, Microsoft, Berkshire. These are all the stocks in the S&P 500. So example, let's say Microsoft closes for 5 minutes and the price doesn't calculate that in its value and it's still reflecting in the net asset value. It may show a disparity, or price moves too fast, or not all shares in the index open at the open. So keep an eye on that. But typically the net asset value will be higher and it'll be at a premium to the market price. But the point of all of this is to teach you what ETF selling at a premium versus selling at a discount to fair value means, and where you get that value, and it's the net asset value. And what does it include? It includes the average weighted shares per the asset, because ETFs in the US are share weight. In other words, the more market value it has, the more shares represent the index's value. So again, it has to have that proportion shares. Then it takes the costs, dividend expenses, the management fees, and that's why the net asset value is usually higher than the market value. But again, there's two values. There's the market value, there's the net asset value. If the net asset value is lower than the market value, that means the shares are trading at a discount. If the net asset value is higher than market value, that means it's the shares are selling at a premium, and that's usually how it is. Hope that helps, and hopes I didn't mess it up too much. But now you understand that assets usually have two values, and now you understand what it means when an asset, when the ETF is selling at a premium versus selling at a discount. Hope that helps.